Hello, I'm Anise Hawkins, broker and owner of Venetian Realty Group. I've had a lot of questions from potential home buyers asking me, if your credit is less than perfect, what documentation is needed in order to get pre-qualified for a loan? The other question that I've been getting, if I'm self-employed or if I'm going to be transferring here to Georgia, what documentation is needed in order for me to get pre-qualified for a loan? Let me answer those questions. If your credit is less than perfect, the documentation that you will need from the bank are you're going to need bank statements. They have to go back at least 3 months. You're going to need current pay stubs, which have to go back at least 30 days. You're also going to need a W-2 from your current job. You're also going to need a photo ID. If you're going with a loan program that is not credit score driven, what you're going to need are letters of explanation explaining any derogatory credit history that you may have. Again, we've talked about this before on what letters of explanation are needed for extenuating circumstances. If you're going to go with a loan program that is credit score driven, and the reason why a lot of people have to go with a loan program that is credit score driven is because they do not have an extenuating circumstance or something that can explain why they were derogatory previously on their credit report. One of the reasons why may have been I was young and I was immature. That's not considered an extenuating circumstance, so therefore their credit score is low. There is a program that is available. All it requires is a 500 credit score. Now, as with any loan program, there are certain requirements that must be met. If your credit score is between 500 and 579, you must have 10% to put down for your down payment. If your credit score is from 580 to 599, you must have 5% to put down for your down payment. If your credit score is 600 or plus or higher, you only need 3.5%. Now, like I said, there are certain requirements with this loan program. Number one, the down payment cannot be a gift. It cannot be given to you by a family member, by a co-worker, or a friend. It has to be from either a 401k, a savings, or a mutual fund, something of that nature. If you're going to be transferring here to Georgia because your job is transferring you here, the only documentation you will need is a letter from your employer basically stating when you're going to be moving here, what your title will be, the location of your job, when is your start date going to be, and what is your income going to be. That's all that will be needed in order to get you pre-qualified. In order to close you, all we simply need is that first pay stub, which will basically document everything that was put into the letter of transfer from your job. However, if you are transferring to Georgia to come and look for a job, if there is less than a 30-day gap from the time that you move from, let's just say, New York to Georgia, we can still close you in about 60 days. You just have to have a pay stub. However, if it takes you longer than 30 days in order to find a job, you must be on that job for 6 months, and then we can use a 30-day pay stub in order to close you. If you are self-employed or 1099, you need at least 2 years of tax returns. Understand, they go by what you net, not by what you gross. And here's a perfect example. I was working with a guy who owned a trucking company. He made $250,000 gross. However, he wrote off $230,000 worth of expenses. Now that was great for him because he didn't have to pay a lot in taxes. But this can be a double-edged sword because now it looks as if he only netted $20,000. And quite frankly, $20,000 is not enough to get you qualified for a single-family home. So you have to be very careful when we start talking about what you're grossing and what you're netting. The other reason why it needs to be 2 years is because they take the average of the 2 years. So let's just say year one, after you wrote off everything, all of your expenses, you netted $60,000. The second year, after you wrote off everything or you wrote off your expenses, you netted $20,000. That is a total of $80,000. The bank then takes half of that amount, and it looks as if you made $40,000 average for each year. So you need to be very careful when you start taking off your expenses. The other thing is if you're trying to get into a home this year and you filed your taxes last year, but you wrote off a lot, that's okay. One of the other things that you can do is you can go back and amend your taxes if you wrote off too much. Now understand, you're going to have to pay more in taxes, but you will end up netting more income to be able to qualify for a home when you add the income for the following year. Don't let other lenders stop you from becoming a homeowner simply because they do not have the loan programs available in order to get you qualified for a loan. Remember, the only difference between you and the other homeowner may simply be a loan program. Let Venetian Realty Group help you realize the American dream by becoming a homeowner. Please feel free to give us a call. You can reach us at 678-886-8133, or feel free to visit our website at venetianrealtygroup.com. Thank you and have a great day.